Most people think you need thousands of dollars to start investing. That's completely false. In this video, I'm going to show you exactly how to invest your very first $100, step by step, even if you've never bought a single stock in your life. By the end of this video, you'll know exactly where to open your account, what to buy, and how to set it on autopilot. Let's get into it. Here's something the wealthy don't tell you. It's not about how much you start with, it's about starting. A single $100 invested today, growing at a 10% average annual return, the historical average of the S&P 500 becomes over $1,700 in 30 years, without you doing anything else. Now imagine adding just $50 every month on top of that. That's the power of compound interest, and it works for anyone willing to start today. Step 1. You need a brokerage account. Think of it like a bank account, but for investments. Here are the 3 best options for beginners in 2026. Number 1. Fidelity. 0 account minimums, no fees, and one of the most beginner-friendly platforms available. Number 2. Charles Schwab. Another zero-fee platform with excellent educational tools. Number 3. Vanguard. Best if you specifically want index funds and plan to hold long-term. All 3 are free to open. Go to their website, click Open an Account, fill in your personal information, and link your bank account. The process takes about 10 minutes. One important note, if your job offers a 401k with employer matching, max that out first before opening a separate brokerage. That employer match is free money. Never leave it on the table. Okay, your account is open. Now the big question, what do you actually buy with $100? For a complete beginner, the answer is simple. An index fund, specifically one that tracks the S&P 500. The S&P 500 is a collection of the 500 largest companies in the United States. Apple, Microsoft, Amazon, Google, and 496 more. When you buy an index fund, you're buying a tiny piece of all of them at once. You're not betting on one company. You're betting on the entire U.S. economy, which, historically, has always gone up over time. Here are 3 beginner-friendly options. VOO, Vanguard S&P 500 ETF, SPY, SPDR S&P 500 ETF, FXAIX, Fidelity 500 Index Fund. Any one of these is an excellent choice. Warren Buffett himself has said that most people should simply put their money in an S&P 500 index fund and leave it alone. Now let's talk about why starting early matters more than starting big. Compound interest means your money earns returns, and then those returns earn returns on top of that. Here's a simple example. Invest $100 at age 25 at 10% per year. By age 35, you have 259 hours. By age 45, you have 672 hours. By age 55, you have 745 hours. By age 65, you have 4,126. Your $100 turned into 4,126 without you doing a single thing. Now imagine investing $100 every single month. At that same 10% rate, after 30 years, you'd have over $226,000. This isn't a get-rich-quick scheme. This is math. And the earlier you start, the harder it works for you. Here's the secret weapon that wealthy investors use: automation. Once your account is open and you've bought your first index fund, set up automatic investments. On Fidelity or Schwab, go to Automatic Investments in your account settings. Choose your fund, set an amount, even $25 or $50, and pick a date that lines up with your paycheck. Now your account invests automatically every month without you having to remember. This removes emotion from investing. You won't panic sell when markets drop, and you won't forget to invest when life gets busy. Set it. Forget it. Let time do the work. Before you go, let's cover the 3 biggest mistakes beginners make, so you can avoid them. Mistake number 1, waiting until you have more money. There is no perfect time to start. Every month you wait is a month of compound interest you lose forever. Mistake number 2, trying to pick individual stocks. Even professional fund managers fail to beat the market over 10+ years. Don't try to outsmart the S&P 500. Just buy it. Mistake number 3, selling when the market drops. Markets go down. That's normal. In 2020, the market dropped 34% in 1 month, then recovered fully within 6 months and hit all-time highs. The people who sold locked in their losses. The people who held or bought more came out ahead. Stay calm, stay invested, stay the course. That's it. Your complete guide to investing your first $100 in 2026. To recap: 1. Open a free account on Fidelity, Schwab, or Vanguard. 2. Buy a simple S&P 500 index fund like VOO, SPY, or FXAIX. 3. Set up automatic monthly investments. 4. Leave it alone and let compound interest work. The best time to start was yesterday. The second best time is right now. If this video helped you, hit subscribe. I post beginner-friendly money tips every week. Drop a comment below. How much are you starting with? I'd love to know. See you in the next one.